Welcome back, everyone, to the Realty One Stop YouTube channel. Today we are going to do the part 3 video about investing to grow your wealth and increase your net worth. This is my favorite part of this series. It is the one I was most passionate about on my journey to financial freedom, and I can't wait to walk through some of those big picture ideas on how to invest, my philosophy on investing, and the things you should be doing on your journey to financial freedom through investing your capital. So to start us off, the most important overall idea to understand when it comes to investing your capital and your net worth is to only invest in vehicles that you understand. And by vehicles, I mean what types of investment assets do you understand and can you educate yourself on enough to be fiscally educated, where you're not making rash decisions or uneducated decisions or trusting other people necessarily to grow your wealth. So to do that, you need to decide first, what are you going to spend your efforts on? Meaning, are you going to be an active investor where you're actively engaging several hours, tens of hours each week on your investments? And there are some type of investments that are very active. Are you going to be a passive investor, meaning you're going to put your money in one place or with one type of person or type of asset, and you're going to let it sit, meaning that it is totally passive and you're not involved in any day-to-day decision making with that investment? Another thing that is important is to make sure whatever you're going to invest in, you can get a reliable, measurable return, right? What I mean by that is, if I was going to invest in, let's say, precious metals, I have absolutely no idea what precious metals are going to give me as a return for the next 5 years, let's say, on an annual basis. I have no idea. Could be 1%, could be 50%. I have no idea. Obviously, I don't invest in precious metals, and I'm uneducated on that asset vehicle. So for me, I would never do that, at least not unless I become educated in that type of asset. My point being, though, is if you don't have a predictable and measurable anticipated return on an investment, I would not recommend investing in it. Now, you can look at historical averages, you can look at pro formas, you can look at different projections that investor managers put out or syndicators put out. There are things you can do to at least have some sort of estimate as to what a return should be. But again, this comes back to, you need to be educated. It's your money, it's your wealth, it's your net worth. You need to understand and make educated decisions on what type of investor you're going to be and what type of reliable return can you expect. Again, you want to make sure, is that something I'm going to be involved in day to day? Is that an active investment? Is it a passive investment? Set it and forget it, so to speak. So stocks are great. I want to talk about those first. There's a lot of advantages to investing in the stock market and various stocks. I personally do not invest heavily in the stock market. I had a 401k equivalent at my prior W-2 job that I let that grow over the 10 years that I was a full-time police officer. It had a pretty mediocre return in my specific type of investment I was in. But I personally am not an expert on stocks. I think there's a lot of things I like about the stock market. I personally may look at doing some tax-advantaged stock investing here in the next few years. As your income goes up, it may make sense to dump money into tax-advantaged stock accounts. That's a whole nother topic that I'm not going to get into today. But just understand that there are certainly a place for stocks in your investment portfolio. But again, if you are going to dive into the stock world, you need to make sure that you understand what you're investing into. Right now, I would say about 90% of my assets are invested into real estate. That's obviously what I do, and that's what most of my videos are going to be about. And in my opinion, real estate is the best option for me personally because it has the most control. And you can leverage so many aspects of real estate investing. Okay, you can leverage other people's capital, whether that's private lenders, whether that's banks. You can leverage people. I personally have a construction company and I have a team of people who work for me and my company, and I leverage them as employees to go out and do, renovation tasks, leasing. There's so many things that up my return on my investments because I am able to leverage other people. It's not just me doing everything. You can build businesses around real estate like I have. I built a real estate sales business. I built a construction business. I may build a brokerage or a property management company in the future. Those are all options that are ancillary businesses to my investing strategy in and of itself. There's so many types of real estate investing. I'm going to get into some of those specifics later, but just understand that to me, real estate has the most variety. And when you contrast that to, let's say, stock investing, if you were going to be an active stock investor, which a lot of people call day traders, right? You're monitoring the market every day. You're combing through the company's financials. You're looking for the best stock picks. Of course, there's, that the old study that showed that, most day traders don't beat the S&P average return. So a lot of people say that day trading is more gambling than it is a science, but I'm not going to get into that debate on this video. The point being that if you want to be an active stock investor, you are going to be spending a lot of your days and hours studying the market and trying to beat the average market returns. Okay? And that's still an active investor role, just like you can be active in real estate investing, which is what I do. So some of the benefits of real estate investing, and there are a ton, but some of the benefits that I personally look for are cash flow, right? That is just simply the money left over each month. You have your income from your tenants, your rents, and then you pay all your expenses. Whatever's left over, that's your cash flow in the most simplest terms, okay? You have different types of appreciation, meaning the value of your real estate goes up. That can be done by market factors like we've seen the last 10 years, right? The markets went up every year. And then the past couple of years, it's went up over 10% in my market here in Ohio. And there's other markets where it's gone up way higher than that. So you have market appreciation as another benefit of real estate. You can also do forced appreciation. This is called many different things, value add, the Burr method. But basically it means you're taking a property in one condition, improving it, and raising the value of that real estate through those improvements. That's forced appreciation. That's a big part of my strategy as a real estate investor. Obviously, you have your principal pay down, meaning that when your tenants pay rent every month, the balance of your mortgage, if you have a mortgage on your property, is going down every single month when you pay your mortgage. That's principal pay down. That's equity added to the property, and that's capital or value added to your net worth as an individual. One of my favorite aspects of real estate investing is the tax advantages. You get better tax advantages in real estate than any other asset class, in my opinion. Okay, you get your regular depreciation. You can do accelerated depreciation. All of your expenses are deductible. You get deductions on your property taxes. You get deductions on any other legitimate business expense you have related to your businesses supporting your real estate. Okay. You can get accelerated depreciation on certain types of renovations like vinyl flooring, like appliances have an accelerated depreciation schedule. So I'm not a CPA, I'm not a tax expert, but these are some of the strategies I use with my CPA to get massive tax benefits every year just from owning and investing in real estate. So some of the different types of roles to consider if you're considering getting into real estate investing or if you're already in it, and there's so many different types. But there's flipping, okay? That's where you buy a house, you fix it up, and you sell it for a profit. There's wholesaling, where you get properties under contract directly with a seller, and you assign or close and resell that property for a higher price. You make the difference in the margin of that property. Obviously, buy and hold rentals. That's mainly what I do. You can get into single-family rentals, multifamily rentals, commercial, strip malls, office space. You can raise money. That could be just your aspect in like a syndication company. You could just raise money to buy large apartments or other types of real estate. You can lend money. This is something that I'm looking more into doing in the future, where if you have capital sitting in your bank account or an IRA or some other type of capital asset, you can lend that for a pretty substantial, reliable return if you trust the person you're lending the money to. And you could get 6, 8, 10, 12% on just lending capital into real estate deals. You can obviously invest passively. If you put your money into syndication funds, if you invest into REITs, if you are, again, lending money, you can be completely passive as a real estate investor and still get tremendous, controllable, reliable returns you may not find other places. And you can also do partnerships, okay? And this is something I've done in the past. You find another investor that either has capital or expertise or deals or as a contractor. Somehow you two symbiotically come together, make partnerships to take down real estate deals, and it can be very advantageous to both of you. So when I talk about control, I want to reiterate some of those things I mean when you're talking about how you have more control in real estate than other asset types, okay? So in real estate, you get to choose your financing, your property manager, your tenant, your contractors, what types of renovations and finishes you're doing, what neighborhood are you buying in, what type of asset, is it a single family, multifamily, commercial? You have control over almost every single aspect of real estate. And when you're educated and you know what you're doing as an investor, when all of those decisions or most of those decisions are made correctly, that is how you profit massively and get the largest returns in real estate. Okay. Again, those are all layers of control you do not have in putting money in the stock market or buying crypto or buying precious metals or buying NFTs or any other type of asset. And so, once you've created wealth and you've started to grow it, there's pretty simple math that if you pass like 5th grade math, you can figure this out. It's not that difficult. I'm not great at math, but I can do basic math. So you can determine how much capital do you need to grow and how much net worth do you need to have to reach financial freedom. You can also determine how quickly am I going to get there based on my investments and my expected returns. This is something that I set down and did about 5 years ago to figure out how many years of investing am I going to have to do with, my range of returns to hit financial freedom. And this is something you're going to have to determine yourself. But it can also help you determine, am I going to raise the money by myself through my other income sources like we talked about in the last video? Am I going to get private loans from people? Am I going to take hard money, which is kind of like a private lender, but it's a corporate structure that lends money, and typically they're going to charge you a higher rate, more closing costs or points up front, and a higher interest rate. But if you can determine a reliable rate of return, okay, you can determine exactly how long it will take you to reach financial freedom when you invest and grow your capital. So I'm going to give you an example just so you can kind of wrap your head around this. All right. If you invested $100,000 a year and could expect a 10% return, and you wanted to reach $1 million in net worth, let's just say that was your first goal, how long would that take you? Okay. Well, if you're compounding your return, meaning you're reinvesting your return, it would take you less than 7 years to reach financial freedom. Okay. And if you wanted $1 million if you wanted $1 million net worth that was invested passively, and then you could expect a 10% return on that money, then you would have $100K passively in returns. Okay. And if that was all you wanted to live on, which would be obviously a very comfortable life in most places in the world, then you could do that and be basically retired or living financially free in 7 years or less. Okay. I did the exact same math problem. I did the exact same structure. I figured out my numbers on my income. What could I invest and what return can I expect? And I was able to reach financial freedom in 5 years. I did exactly what I'm talking about doing 5 years ago or so. Exactly what I'm telling you guys. And, when you're able to do that successfully, when you become educated, when you raise your income, when you start investing, you start seeing the progress of those investments and how quickly they snowball and compound over time. It is one of the most satisfying things to watch. It's like watching your kid grow up and learn and become independent and brilliant. And it's one of the most rewarding feelings, being a parent and being an investor. I see a lot of similarities in those two things, and it's, not to sound cheesy, but it's a beautiful thing to watch. And simply put, a lot of people get upset about this idea, but this is why the rich continue to get richer. Okay. In simple terms, the more money you have, the more you can invest, the better returns you can get, the more your wealth grows, right? So it's kind of like, imagine an avalanche. If you start as a little pebble of a snowball rolling down the mountain, by the time you're at the bottom of that mountain, it's a massive avalanche, right? I mean, that's how snowballs work on mountains. It's how avalanches start. They grow and they grow and they compound and they reinvest and they grow and they pivot with the market and they continue to expand their wealth. So that's why if you look at some of these families, I'm kind of a history nerd. If you look at the families historically that have controlled large amounts of wealth, they've literally held on to that capital through various generations, assets, through hundreds and hundreds or even thousands of centuries, depending on what family you're looking at. And that's why they're trillionaires or more today, because they've compounded this money and they've had that control and power over hundreds of years. Okay. And that is, in a nutshell, investing. That's what it is. Okay. Now, we're not talking about being necessarily, a royal family or something like that, but anyone in America or most modern countries in the world has access to free information to do all the things that I'm discussing today. Okay. There's a ton of people out there teaching the same ideas that I have used and that I am teaching. And it's really important to wrap your head around this sooner than later. And here's why. And I'm not trying to, give you a doomsday scenario or the sky is falling or anything like that. But I want you to understand that in 2021, we had an estimated 7% in real inflation. Okay. It could be higher than that, but that's the kind of the consensus of the government and the economics that here in the U.S. we had approximately 7% inflation, right? So that means if you had $1,000 in your pocket, it became $70 less valuable, okay? If you had $1 million in your pocket, you just became $70,000 less valuable, okay? And we're talking about spending power with the inflation. So the assumption is, at this point, early in 2022, that high levels of inflation, we don't know the numbers yet, are going to continue at least into 2022 and potentially for longer. So with that mindset, we want to invest in assets that are going to grow with an inflating market. Okay. Real estate, in my opinion, is the asset type that is most benefited from inflation. Rents inflate. I'm sure all of you are seeing how high rents are going. The values of properties are going up. Wages are increasing. All of these things are combining that all inflate the values of real estate, both in terms of cash flow and in, real equity and the actual value of the asset. So doing these things, becoming educated, understanding asset types, picking what you want to do, picking if you're going to be an active or passive investor. Those are the things you need to do before you start investing, and then determine what that asset type is going to be, start investing in it, and stay consistent with it. Do your math, determine how much of a return you need, how long, until you can reach your financial freedom. How much income do you need? How much savings rate do you need to dump that extra money into these assets? Okay. Once you do that, you will determine when you'll hit that level 1 financial freedom, right? Level 1 financial freedom just simply means that whatever my bills are, and if you're being a frugal investor, that means you're going to keep your cost of living as low as you possibly can. What is my number to reach financial freedom? For me, my personal expenses are about $4,000 a month. I knew that if I could create cash flow in my rental properties that exceeded $4,000 a month, I would, at a bare minimum, be able to survive indefinitely. As long as I kept those, rental properties afloat, I'm going to be able to survive indefinitely without working, without any extra income. Okay. That's level 1 financial freedom. Okay. So it's kind of a simple formula, just to reiterate. If I do X, Y will happen automatically in Z amount of time. It's simple math. Like I said, kind of 5th grade, 6th grade stuff. Grow your income, invest your capital, grow your wealth and net worth. And that will get you to our next and last and final part of our series here, where we're going to talk about how once you've reached that level 1 financial freedom, what do you do from there? Okay. How do you continue to grow your wealth? How do you build a lifestyle design around your financial freedom? Okay. What do you want to do with it? Right. Like, I mean, again, I don't think any of us, if you're watching this video, none of us are building financial freedom, building our wealth just so we can, lay around and watch TV all day. Right. Hopefully you have bigger aspirations for that, whether it's with your family, whether it's with your business, whether it's with philanthropy, whether it's with traveling the world, whatever that looks like for you. Why are you doing this? What is the purpose? That's what we're going to talk about in our next video, and how to take the next steps once you get to where I am today, which is that level 1 financial freedom. How do you build out your life from there? Okay. Again, thank you guys so much for watching this entire video, watching the first 2 parts in this series. Again, this is the part 3 video, and we have one more part. I am going to make many more videos that are very detailed, specific to all these types of ideas we've talked about in the first 3 videos. Again, these videos are just general overviews. So, if I didn't get into enough detail for what you're looking for, please feel free to leave comments, leave questions. I am happy to make specific response videos to your questions and comments. And again, I'm going to break down many of these topics and ideas in very specific detail in later videos. I wanted to start with this 4-part series just to give a general overview of my journey, my experiences, and the things that I hope you will learn from them. Okay? So thank you so much for tuning in to the Realty One Stop YouTube channel. I will see you guys next week in the part 4 in the Journey to Financial Freedom video series. Thank you.